So, Surbhi, if you look at our model portfolio, some of those stocks are already present there.
Okay.
So, we are quite positive on capex and auto.
Okay.
And I think given where interest rates are, given where the policy momentum is on manufacturing, infrastructure, the whole capex theme, they can continue to do well if there is a continuity in the government formation. Right? So, we have, say, for example, stocks like L&T, the big weight, stocks like Ultratech, Godrej Properties, even SBI for that matter, SBI and ICICI, because in a very indirect way, they also benefit from the higher capex spending that happens in the economy.
They fund this
they
whole
will fund those big
industrial
projects,
expansion
right?
that's going on.
So that is on the manufacturing side and capex side. On the consumption side, we are heavily overweight.
Okay.
Right? We have the highest overweight on consumption. We have about 19% weight allocated to a consumption stock.
And that's what kind of consumption? The
So
toothpaste, sabun tel, or the movies and the hotels?
Yes.
Discretionary.
Yeah.
Okay.
So our single largest preference for a very long period of time, for last 8-9 years, has been Titan. So that's part of the model portfolio. Then we have both the hotel stocks in the model portfolio, which is Indian Hotel and Lemon Tree. We have Zomato, which we added about a couple of months back, right? Then we have Kajaria, Metro. And on the staple side, we have ITC and Godrej. So about 7-8 stocks, which together comprise about 19% of the weight.
Okay.
And then the usual, big part of the weight in any model portfolio will always find allocated towards financials. Within financials, we have one difference, which is that we have a big overweight on PSU banks, whereas relatively neutral on private banks. Right? So our big overweight is on SBI and Bank of Baroda, and private banks are neutralish. And then we have a chunk of NBFC stocks where we are quite positive. So names like Bajaj Finance, Mahindra Financial, Piramal, they dominate our portfolio. And last but not the least is auto. As I keep telling you, that auto has turned around in a very strong fashion. Yeah. After 16 consecutive quarters of earnings downgrade, last 3 quarters you have seen upgrades. Right? And this quarter again, auto was the best performing sector on earnings. So we have big overweight there. We have stocks like M&M, Ashok Leyland, Bharat Forge and Craftsman. So that by and large, basically
that's the
merges.
Overall. That's the overall portfolio. But I'm going to ask my question again. Now, give me 3 or maybe 4 stocks, which are like probably good plays. Elections being one big trigger, but next 6-7 months, you think from this whole big portfolio, the 3 or 4 that you'd really watch out for that,
so
that you think can do well.
One would be L&T.
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 Yes.
Second will be Titan.
Titan.
And third will be Ultratech.
Ultratech.
Yeah, this thing.
Very interesting.
Because they together, broadly represent your capex plus industrial plus consumption theme.
I was at a Titan store, I think last week or something. The way I see the crowds there, and the festive season hasn't even begun just yet. So, really, I think
it's reflected in the numbers also. It's one of the few consumer companies which consistently grows top line at 20%, right? Whereas most of the other consumer companies, staples, if you look at the last 5-10 year compounding, the top line has not crossed 10%. Hardly 1 or 2 companies have grown their top line at 10% plus each.
Imagine, people are buying jewelry probably at a higher rate than they're buying.
That's a classic income effect, right?
Yeah, wealth effect.